Good evening, friends. Welcome to my weekly analysis. This week has been interesting on many levels. First is Indian currency. Next, US consumer inflation data and its implications. And cryptocurrency. One FTX crypto exchange went bankrupt. This led to free fall in many cryptocurrencies. And next is recession concerns and layoffs in Facebook, that is Meta. Coming to the first, currency. This week has been best week for Indian currency. It strengthened from 82.50 levels to 80.50 rupees per dollar by Friday close this week. Main reason being US dollar index cracked from 110 to 108. That is, dollar strength is coming down. Next is US consumer price inflation. Inflation data was expected to be 8%, but it came out to be 7.7%. Anyway, low inflation is good for the economy. Fed is succeeding eventually in its fight against inflation. Now it can be less aggressive in increasing interest rates, but we have to see how these rates sustain, and most probably these rates will continue for some time, that is at least for 1 year. And next important event is this week is cryptocurrency rout. This is one of the bad incident happened. We will see. We will go into the details. FTX is a crypto exchange. This is actually the second largest crypto exchange. Exchange means just a marketplace. It went bankrupt this week. Actually, many innocent investors' money turned into assets. Actually, this single exchange was worth around $8 billion, or conversely 64,000 crore rupees. In fact, as just I was preparing for this analysis, I read on the news that FTX reserves were hacked and almost $600 million was stolen. Actually, this cryptocurrency filed for bankruptcy, and whatever the remaining reserves, even those were stolen from their reserves. This is so pathetic. It's like a daylight robbery. Actually, this all started during the corona pandemic. During this crypto frenzy, many innocent people were enticed into this imaginary asset. Now, no government is accepting it as a legal tender, not even legal tender. It is not worth it. They do not have any underlying these cryptocurrencies. Suppose if you purchase any object that is tangible object, any investment like any company shares or anything, you have something underlying value for that. But if you purchase something called imaginary cryptocurrency, what is that underlying? Sometimes they increase, sometimes they decrease. Now see, here now the Bitcoin is trading at almost 16,500 levels. It touched the low of 16,300. Look at it. Actually, the Bitcoin 1 year ago was trading at almost $64,000. Now it is almost 1/4 of its rate. How can we trust anything like this? Good thing is that cryptos are not part of our economic system. Else, this scam, this infestation would have impacted whole of the economy, and it would have had far-reaching effects, because so much amount of money were turning into assets now. Good thing is that Indian government did regulated this crypto transactions, so that not many people invested in cryptos. This is good. Next is recession and layoffs concern. Actually, it is reported that Meta, or that is Facebook, has laid off 11,000 employees of its staff. First, looking to why all companies are now frozen their hiring process, or laying off their staff. Actually, what happened was, during corona pandemic, all the tech companies required higher human resources. There was so much demand for employees, so they recruited more employees. Even attrition rate touched as much as 20%. 20% is too much high. Actually, attrition meaning is that the number of percentage of employees willing to shift to another company for monetary benefits. That is, if they shift to another company, they get more salary. If there is demand, there will be such type of benefits. When there was demand, so people were willing to shift to another company. But now, as demand is coming down, now companies are struggling with overstaff problem. One year back, companies willing to take more people at whatever the cost. Now companies are struggling with the overstaff problem. This is because of change in interest rate environment and struggling to survive in this tough environment. Moreover, they anticipated much projects. Maybe they are not able to get projects that they estimated. That's why they are thinking to cut down their cost. Next is FII and DII data. This week has been another fantastic week in terms of FII buying. FII, we said that in the last week video also. FII is foreign institutional investor and DII is domestic institutional investor. And also, last week we discussed that FIIs have bought equities worth 6,000 crore rupees in the last week alone. Now also, this week also, see here, they have purchased again another 6,000 crore worth of equities. Now, combining a total of 12,000 crore assets have been purchased within just first half of this month. Only this is 11th November yesterday. So within 10 days they have purchased 12 crore worth crore stock. Actually, last Friday has been fantastic because last Friday before that night US CPI data came positive and US markets have rallied like anything. So as a consequence, both FIIs and DIIs both were net buyers on last Friday. Now coming to domestic events. These days, presently, Russia has become the largest crude oil supplier to India now. Meaning, now India has stable supplies from Russia at lower prices. Actually, before Russia-Ukraine war, Russian oil imports were insignificant. But now we have stable supplies from Russia, and in the long run, this is good for Indian consumers because we are no longer dependent on erratic supplies from Gulf countries. And next is rupee is strengthening that we have seen, but this strengthening rupee is good for imports. Actually, India is net importer of many goods, not just crude oil, metals, some food grains, even palm oil or edible oil is also net importer. So there are many things that India is dependent on for imports. So strengthening rupee is good for imports. That is indirectly good for economy. Now some small concern, not big concern thing is wheat prices. Due to less supply and less crops this year, wheat prices are a bit high comparatively. Now whatever, government will control it by releasing excess reserves into open market. Actually, government stores food grains through Food Corporation of India from farmers and stores it for emergency purpose. So government will release in case of any such dire consequence. Next important is RBI MPC meeting is scheduled on December 7th. It is almost 1 month is there. But anyway, Fed meeting over last November 3rd. with the inflation coming down, RBI may not hike rates. Let's see on the day. CPI data came also lesser than expected. Markets rallied. CPI data came lesser, so markets rallied unexpectedly amid strengthening rupee. Actually, these are important concerns into the next week. Actually, finally, sanity is returning to the markets with less government involvement. Actually, these days, from the past few months, governments were involving in the economy too much with rate influence. But now, for some time, governments will not touch anything. They'll let down the inflation, come to normal levels on its own. So this is good thing. I will upload another video on Nifty and Bank Nifty analysis.